Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Taiwan index, that's down 1.3%. Hang Seng, that's trading with cuts of 1.5% as well.
This morning, it was confirmed that a ballistic missile hit Qatar's Ras Laffan industrial city.
I really want to emphasize is that nobody knows. You know, the economics effect could be bigger, they could be smaller.
Oil prices are, of course, at $111 a barrel. Bulk of the move happened last night.
Management felt Atanu Chakravarti, as a non-executive chairman, was functioning in a very, and I quote, executive style.
For the first time, we're actually hearing some moderation from President Trump.
It was received by the bank yesterday evening, and they met the RBI, the net RBI later on in the evening.
32-33% of world energy supply is crude oil, and 20% of that is stuck.
LNG supply from the Middle East is likely to remain constrained over the next few months due to the damage that we've seen to infrastructure.
500 points straight off the bat, 2.2% taken out of the Nifty. The Nifty banged down by 1,500 points.
The company, that is Prudential Corporation, is looking to exit life insurance, ICICI Prudential Life Insurance.
Almost a 600-point cut on the benchmark, and the mid-caps, the Bank Nifty, they are the ones which are outperforming by a slight margin though. But yes, it's an underperformance nevertheless.
Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and joining me today is Manglam. Manglam, it's been a very, very weak trading session. Any kind of bounce has got sold into. The Nifty currently at the low point of the day. And to be fair, HDFC Bank actually has recovered from the low point of the day. But yet the breadth of the market is actually very, very dismal. And the bigger fear is all through the trading session, Brent crude prices, the traded value has only moved up. And that's going to be a big, big pain point. And I'll tell you what, tomorrow the money markets will reopen and the rupee is likely to make a fresh low unless some big de-escalation takes place today. So a bit of an issue. I was getting a little bit positive in the last few days because the FI net sell number from 10,000 crores had come all the way down to around 2,500 crores. And today there'll be some domestic participants that actually would be on leave. So the FI sell number, actually the selling is getting a little bit more intense because the buying could be a little bit lower given that the banks are shut.
Take that point, Nigel. So far in the day, we've had almost 95,000 crore of cash market volumes. The last 7-8 days, the average has been around 90,000 to 1 lakh crore. So all the belief that maybe there would be lower volumes today goes out of the window. Domestics aren't participating, so big FII sell number likely. And I was looking at some of the data. Looks like 7,000-8,000 crore worth delivery selling would be on HDFC Bank alone. But be that as it may, it's been a perfect storm of sorts. Not only has HDFC Bank issue put a wrench in the way the markets have fallen, crude through the course of today's trading session, we started the day with crude being at around 111, moving towards 112, and now as we speak is at $116 per barrel and more. The Nifty at every lower level has been seeing some sell-off, but more importantly, the support that would earlier come from, say, something like a Reliance or an IT index, that hasn't come either. So we have the IT index, which is at the low point of trade, and Reliance, that's the one that should come up for you as well. Briefly went into the green, supported the cause of the frontline index, but now has moved to the low point of trade, and the market breadth leaves a lot for the bulls to wish. But the question then again is, how should you position yourself in the last hour of trade? Mitesh Thakkar from Bonanza Portfolio joins us now for closing strategies. Mitesh, it looks like the last 3-day bounce that was there only gave bears more ammunition to short with a lot more gusto. Took a lot of the bulls out of the market today.
That's right, and good afternoon. So I think, I always maintained that the move which was happening for the last 3 days, which is basically from Monday till Wednesday, was always a pullback. And we had two targets, 23,800, 820, and then 24,200. But we kind of failed at the first level itself. I think the bigger picture is still on the negative side. If you look at the weekly charts, the monthly charts, they are still turning, indicators are turning downside, which means that there will be more stronger supply and there will be bounce backs like we had a couple of days back. But I think those will be sold into. Until we get a strong reversal on at least daily indicators, I think, Till then, I think the markets will possibly, with some volatility, be heading down. So with that, I think the Nifty is back to those levels of 23,100. The Bank Nifty is back to that support of 53,600. So again, if somebody had some short positions, if you want to take some profits, good levels. But in case we start closing below today's low for the Bank Nifty, then I think I'll add on to the short side exposure. On the stock side, I have two sell calls. Blue Star, that's the AC company, that's the sell with the stop at 1760 half for targets of 1715, and Adani Enterprises is a sell with a stop at 1952 for targets of 1905.
Got it. All right. So it appears, at least as of now, Mitesh is maintaining a bit of a negative bias on the markets. Mangalam, you want to come in?
Yeah, on Blue Star and Voltas, the last few days were good for them because the street believed that there was a heat wave coming in. Last year, there was a lot of inventory that was stuck in the system, because of which it was not a great year for any of these AC makers or cooler makers. That was a trade. If you look at, slightly this month's chart or the last 12 sort of days chart or something, you would see that these stocks were doing okay because of the heat wave. And now they have come in for a fair bit of selling from, 1,600. Voltas is down to sub 1,300, 65 thereabouts. And Blue Star as well. Mitesh has put a sell call on that, 1,750 for that stock as well. Let's see where that goes.
Got it. All right. Thanks, Mangalam, for that. Well, let's focus on OMCs. That's the pain pocket in the market yet again. OMCs, whether you look at HBCL, BPCL, IOC, they are trading with deep cuts. Sonal joins us to tell us what's happening to these stocks. Sonal?
West Asia war, that's what's happening to these stocks, Nigel. If you look at the year-to-date chart as well, big cuts across the board. You look at HPCL, it's down around 34%, IOCL a little less at 14%, BPCL at 25%. Now, do remember, between these three companies, HPCL has the highest exposure to the marketing segment. Basically, there are more volumes for diesel and petrol, and that is not the case for IOC. It has the least. And that's why maybe the differential returns is what you're seeing currently. Of course, the first thing being crude oil prices, which are surging. Now, the last number I saw was $116 a barrel. And that is something which will, of course, hit their margins across the board. Singapore gross refining margins, which hit levels of as high as $25 per barrel, swiftly came into the negative territory because the market has been so volatile. If we talk about the other factors, no fuel price hike. India is the only country, I think, in the world which has not taken a price hike in petrol or diesel. That is something which will impact their marketing margins as well. If you look at some of the numbers, for every 1 rupee litre decrease in marketing margins, for these three companies, IOC will see a cut of 21%, BPCL will see 20%, and as I said, HPCL will see it the most at 24%. We don't have the exact figures right now, but yes, these companies are seeing normalized or lower than normalized margins on the marketing front, which they had enjoyed at premium because crude prices were at normalized levels last couple of months. HSBC cut the target price last week for IOC to 150, HPCL to 360, BPCL also a sharp cut. Kotak yesterday did the same thing. There's a sharp cut across target prices because they believe we'll not be able to take fuel price hike, and that is something which will continue to impact their marketing margins. The sharpest cut was on HPCL as well, other than IOC and BPCL. There was an interesting note from ICICI Securities today. Now that we are also talking about supplies being disrupted, it's no more about prices only. We are also not sure about some of the gas supplies which would come by quickly. If dispute starts to normalize in Q1 of FY27, FY28 can still show material upside. And they also talk about how balance sheets are better equipped right now to deal with such crises versus previous crises that we've seen earlier. So they are talking about if things reverse, maybe they can come back to normal. But for now, things are quite tricky for oil marketing companies, both from the refining and from the marketing front.
As tricky as can be, and as we speak, those stocks are at the day's low, and Brent crude prices have spiked up at the day's high. Devin Choksey, MD at DR Choksey Finserv Private Limited, joins us on the show. Hi, Devin. What do you make of this? The hope is that the war comes to an end, and then these stocks could see a big rally. The problem is, for the time being, the earnings are going to be under pressure. And, in the good times, actually, the stocks didn't participate that much on the upside. And now they're clearly coming. There's a strong case for derating. Your view after this sharp fall that we've seen on all the three OMCs?
Yeah, Nigel, good afternoon. Well, I believe that I think no better view can be given at this point of time because the situation remains, I think, quite fluid at this point of time. Though I think the oil level short of India basket, at least at this point of time, is comparatively lower to the current oil market price, I think, that we are having. And that could give some amount of buffer, if not anything else, at least for the time being in a given situation. However, I think one thing is obvious and clear. On one side, if the OMCs are not allowed to increase their prices, and if they have to absorb even the marketing margin, quite possible that I think they will probably be incurring a significant amount of dent in their profits in coming period, because every $5 increase in the crude oil prices, I think you end up losing around 2.5 rupees per liter kind of a cost, I think, on the petrol or the diesel in this case. And that could possibly mean that I think their future operations, I think, could come into problem, even if I think the current operations are working on the prior period, the crude oil basket, which is relatively at lower cost. So I think this is a real unprepared situation, if I may have to use this word, in a price where I think you do not know what is happening the next day. So taking a view on the subject is difficult, but yes, I think calculations guide us that I think it is not going to be healthy.
Take that point. Thanks a lot, Devin, for joining in and speaking about the oil marketing companies. Meanwhile, what we'll do is we'll just go to the top story of the day, come back to you for your view on HDFC Bank as well. Following part-time chairman Atanu Chakrabarty's exit, interim chairman KK Mistry says that the chairman's exit is not linked to the bank's conduct or regulatory concerns. That's CNBC-TV18 News Break confirmed. Let's hear out KK Mistry. Thereafter, we'll get some analysis on the stock as well before we go back to Devin.
On behalf of the board and in full concert with the executive leadership, I wish to assure all stakeholders that there are no material matters at this point of time. Based on our discussions, there was no specific happenings and practices that were brought to our attention. There were no specific operational or other issues that have been highlighted. The board's oversight mechanism remains fully operational, and our collective commitment to protecting the interests of the institution, depositors, shareholders, and all stakeholders is completely and totally unwavering. This disclosure made is complete and transparent in line with regulatory requirements. None of us as board members are aware of what are the specific issues which Mr. Chakrabarty wrote in his letter. The board members asked him yesterday, and he didn't give any specific explanation. As regards Shashi's appointment, it is something that will be considered by the Remuneration Committee, by the Nomination and Remuneration Committee. There is still time to do that, and obviously at the appropriate time, the committee will meet and we will take it up in the board. Nothing changes as far as that is concerned. He's been running the bank successfully for the last many years, and we all hope that he will continue to work with the same devotion that he has over these years.
As we move forward, we will sort of re-examine our organization structure, and with the consent and the advice of the board, we will announce it at the appropriate time. Not at this juncture, without the approval of the board, which I will take it up to them at the right time, post the financial year closure.
All right. Well, keeping it with the focus on the banking sector, especially the private banks, let's bring in Gaurav to understand how the stock performance as well as valuations are now shaping up post this recent fall. Gaurav, take it away.
Yes, if you look at HDFC Bank, today we saw a sharp fall. In fact, even in the opening session, we saw bank's stock price was fallen almost by 10%, and it reached its all-time low of 770 rupees. Now, there was a reason today. The reason being that HDFC Bank's part-time chairman and independent director, Mr. Atanu Chakrabarty, he resigned, and it was not a normal and regular resignation. What actually shook the market is the reason what he cited. He said that certain happenings and practices within the bank that he has observed are not in congruence with his views that he has seen in the market. Now, what happened is that after that we saw stock is still down 4%. But even if we exclude that, let's also understand how it is impacting the market. If you look at Nifty, HDFC is one of the biggest constituents. In fact, it holds around 11.8% weightage. And today, whatever fall we have seen in Nifty, HDFC has contributed almost 100 basis point of fall in Nifty 50 in today itself. Apart from that, what it means for the stock. Now, if you look at the valuations, let's also look at valuations of all the banks, because in the last few days, we are seeing all the banks actually falling in rate, and let's just not blame HDFC. If you look at ICICI Bank, Axis Bank, Kotak Mahindra Bank, all of these stocks valuation in terms of price to book is lower than its 5-year average. But in fact, if you look at HDFC Bank, now it trades at 2 times price to book. if we compare it with the COVID lows, we have seen the valuations going as low as 2.15. So even if we compare it with the COVID lows, the valuations are still lower than what we have seen there. Apart from that, let's also not forget that the 5-year average price to book for HDFC Bank is 2.7 times. So that is also something which needs to be considered. When we look at the performance history, now in this year, in 2026 itself, we have seen markets falling, and there were multiple reasons. Let's also not forget about last year where we saw RBI actually cutting its rate, and that is also something which impacted all the banks, and that's the reason there was an underperformance. In fact, in this year itself, if you look at Nifty Bank index, that has gone down almost by 10%, while HDFC Bank within that index has gone down almost by 18%. But even if we exclude this underperformance because of whatever reasons like war and the interest rates, if you look at 5 years performance, Nifty, that has increased almost by 57%, and HDFC Bank, being one of the biggest contributors to Nifty, that has increased just by 8%. So all in all, even in the 5-year time frame, we have seen HDFC Bank actually underperforming not just Nifty, but most of the banks. Just to put it in the context, if you look at SBI, that has grown more than 100%. ICICI Bank has grown almost more than 50% in the last 5 years. So all in all, definitely there are some arguments that in terms of valuation and in terms of fundamentals, HDFC Bank still holds strong. But even if you look at the performance, it has been an underperformer. If you look at brokerages, now they are actually not cutting their target price. In fact, most of the brokerages still have their buy rating. And even if you look at the consensus target price, it still shows more than 25% of the upside. But let's not forget that the confidence is falling somewhere, because in the morning itself, we saw Macquarie actually removing HDFC Bank from its marquee buy idea. So that is also something which needs to be considered. So all in all, yes, today's fall was attributed to certain events that happened in the bank, but what happens next is something that we should definitely watch out for in HDFC Bank.
Take that point, Gaurav, entirely well explained. The underperformance of HDFC Bank over the last 5 years, not just today or this year so far. So, Devin, that brings us to a two-part question. One, after this underperformance, after this fall, Gaurav spoke about the valuations. No questions about the pedigree of HDFC Bank. Do you think it is a buy at these levels because of its such a long underperformance? Typically, we've seen stocks on the frontline index which underperform for a very long period of time, and thereafter in 1 or 2 years make up for all the last few years of underperformance. So do you think today is the worst of that, and maybe at current levels it is attractive? That's point number one. And the second point is the larger point on the PSU banks versus private sector banks sort of debate, where the profit pool is shifting towards public sector banks, and as a result of which there is a case for valuation reset.
Yeah, Mangalam, I think both points are very pertinent and important. I think let me address the first one. I believe that any bank, to come up in a course of time from where the legacy has been, I think they will probably have to demonstrate the will to adapt to the newer norms of working. Probably, I think the technology adoption in some of the large banks, has been relatively slow compared to some of their peers in the NBFC space like Bajaj Finance, who have been adopting technology extremely meticulously and been in a position to get the better result out of this particular adoption of technology in form of higher amount of lending book, lower amount of non-performing assets, and better amount of spreads. I think that is what the summarization is. And that could possibly be the reason for which the underperformance of banks like HDFC, which has possibly remained laggard in implementing the technology-related stake at their end. Large bank, of course, well accepted. Trust factor, which is a very strong point, in case of HDFC Bank, which remains very high. They deserve to be, undergo the change on that front. And as we heard the management commentary today morning, probably organization restructuring is something which is likely to be on cards. And if that does so happen in next 3-6 months' time, possibly the future years output could possibly improve. So I'm not giving up. I feel that this kind of organizations, they do pass through some amount of challenges in the current context as well. But at the same time, they hold the potential, which is significantly higher, given the kind of growth rate in which they are operating and given the kind of trust factor that they have built in India economy.
Got it. Okay, all right. Thanks, Deven, for that. Let's focus on the NBFC space. Bain Capital has got the RBI nod to acquire the joint control in Manappuram and its subsidiaries. Let's take a look at the others that are waiting for approval, the likes of Shriram, RBL Bank. Going back to Gaurav, busy day for him. Tell us, Gaurav, the read-through of this one. as well as the pending deals?
Well, yes, if you look at Bain Capital and the deal between Manappuram Finance and Bain Capital, it was announced in March of 2025, and after a year, company has said that they have received all the required approvals from RBI, and they will be going ahead with the deal. Now, the last leg of these approvals was because of the subsidiaries. They said that Ashirwad Microfinance and Manappuram Home Finance, both the subsidiaries have also received approval from RBI for indirect change in control and management. Now, what it means is that they said that the deal can be done and completed in this year itself. That means by 31st March of 2026, this deal, an infusion of more than 4,300 crores from Bain Capital in the Manappuram Finance will be completed. Remember, it is only 10 to 11 days away from today, so it is something which is positive. Apart from that, let's also not forget that they have also said that they will be completing the open offer in accordance with the timeline that was prescribed under SEBI. Now, let's also not forget that, yes, last year was actually a year of FDI inflow in the financials. We saw many deals happening, but there are still some NBFCs and in fact a bank which is still awaiting for all the approvals and funds to come in. If you take a look at Manappuram Finance, it took 12 months for the company, but apart from that, let's also not forget about Sanman Capital. Last year we saw IHC announced that they are going to invest more than 8,000 crores in the company, and they were also going to get around 41% stake. Now, the open offer that they were rolling out was at a price of 139 rupees. Let's also not forget about Shriram Finance. If you look at the deal, MUFG was going to acquire around 20% stake, and they also said that it will be one of the largest FDI investment at a cost of around more than 39,000 crores of investment in the company. Remember, this deal actually implied at a price of 841 rupees. Now, why I'm emphasizing on this deal is that if you look at Shriram Finance, specifically the stock price, it has fallen almost by 6% today. And let's not forget that the valuation that they were trading at before the deal, currently, if we compare, it is still at the same valuation even after the deal has been announced. Now, the funds are yet to come. It is really a key thing to watch out for because it can also increase and open some gates for growth. Apart from that, let's also not forget about some banking deals. Now, RBL Bank, they are still awaiting for all the approvals. Remember, Emirates NBD was going to invest around 26,000 crores in the bank, and the deal was announced in October 2025. And they were also going to get more than 60% stake of the bank. And even in this deal, we saw open offer coming up at around 280 rupees. Now, if you look at all the prices, let's also not forget that because of the fall that we have seen, all the stocks from their 52-week high levels, they have actually corrected. And they are also near its open offer price that we have seen in the deals. So let's also not forget that. And let's also see if these offers and if these deals come through in this year, and if they come through, how the stock performs and how they give returns to investors in coming days.
Take that point, Gaurav. Thanks a lot for that. As we speak, Shriram Finance is the top Nifty loser. In fact, the Nifty itself has extended its cuts now down by about 700 points. And a lot of the index heavies, non-HDFC Bank related stocks or non-IT related stocks, we have all the auto stocks. Maruti has seen a fresh bout of selling at the low point of trade. A couple of these two-wheelers, Bajaj and Hero MotoCorp, both of them at the low point of trade. We're also seeing increased weakness in L&T. The stock is now negative for the week. The last three trading sessions, as risk left the market, we saw maybe, a bit of return on L&T, but now it's back below that 34.30 mark, which is basically where it started the week when we saw the low on Monday when it comes to panic. What we'll do is take a short break. We, track all the stocks which are moving around. On the other side, we'll also get in Dinshaw Irani to weigh in on his opinion on how the markets are poised right now. Well, the market is extending its cut once again. The Nifty is very close to breaking that 23,000 mark as well. Now holding on to 23,000 by just about 30 odd points. It is more of the same and a little more, which is dragging the frontline index lower. So we spoke about, HDFC Bank, and the auto stocks. Alongside that, we've seen a decline in Interglobe Aviation, a further sell-off. Bajaj Finance has come up for a fair bit of selling. Fresh selling is what we've seen alongside, a couple of these other index heavies. Coal India, which was holding in the green for most part of today's trading session, has come in for some selling as well, Nigel.
Even Bajaj Auto as well as Bharti Airtel, both of them have moved to the low point today. Bharti Airtel is in the top 10 list, at least in weightage terms. So that moves down as well. That does weigh on. Just take a look at that. Some part of this, a smaller element of this, will be on account of the sensex expiry as well. So just keep that in mind. But for the time being, not a very good looking screen at all. Let's see whether or not we can at least protect the recent low that we saw. But the realty index, that's another sector that has been under pressure in today's session. The sector is now down close to 30% from its all-time highs. Sonal joins us to break down on what's hurting the stocks. Sonal?
Well, a couple of reasons. Let me first take you through the numbers. As you pointed out, it's a 32% fall from its 52-week high. It is down 3% today and has extended those gains as well. That has been the case since the start of the year, but it has now become worse for the realty space. A lot of these stocks are at 52-week lows. On a year-to-date basis, Brigade Enterprises is down 26%. You have Lodha, which is down 22%. Godrej Properties down 22%. DLF, Prestige Estates, Oberoi Realty, Colte Paddle, all of them down anywhere between 13.5% to 25% in the year so far. That's around 2.5 months so far. Now, if we talk about what are the possible reasons, so we talk about energy as one of the big reasons why other sectors are impacted. Real estate is also seeing an impact of West Asia crisis. I've been talking to people on the ground, and the indication is that around 10 to 15% of investments in the real estate space in the country come in from NRIs, and a lot of them have stopped such investments, or at least slowed them down because of what's happening in West Asia, and that is one of the reasons why we are seeing fear of demand going down as well. The second one is gas supply cuts. We've spoken to Morbi Association. A lot of these companies in the tiles and ceramic space have spoken of production cuts because of limited gas supplies, and this, of course, ceramics and tiles are big raw material needed in home building as well, and that is something which is slowing down because of which builders are unable to meet their deadlines, and that has had impact on completion of some of their projects as well. The third reason being how we've seen input price increase, right? So there is a Knight Frank report which spoke about how steel prices have jumped 20% to 72,000 per ton, roughly adding around 50 rupees per square feet to high-rise construction costs. That is impacting ultra-luxury segment. Strait of Hormuz blockade has also forced to reroute, which is adding around 10 to 20 days, and it is adding around 1.5 lakh rupees for these construction materials to come by to the final destination. So all this is adding to raw material costs. Plus, there are delays because some of these raw materials are not available also. And these are a couple of reasons why we could see this pressure coming in on the realty space overall.
Brilliant. Thanks a lot for that, Sonal. Well, let's welcome Dinshaw Irani, CEO Helios Mutual Fund, who joins us on the show. Hi, Dinshaw. What a day, right? Markets at the low point of the day, and the big boy HDFC Bank out of nowhere. You're getting this sort of news flow in an already wobbly market. Let's get that out of the way first. The valuation argument is something that people are putting on board. The stock is available at around 1.5 times price to book its core book, that is, on the standalone basis. And then you add 120 to 140 rupees for its subsidiaries. Which camp are you in? Do you think that valuations are now too hard to ignore? Or do you think the bank went through that transition phase of the merger, had a lot of patience out there? Some of that merger positives have not yet been seen, and they're struggling to garner deposits in spite of having so many branches. Would you be tilting towards a positive bias, or do you think it's in a void for now?
So, Nigel, thank you for having me on the show. First of all, I want to start off with something which I heard on your channel in the morning. Neelkant had come to your channel and he said that the markets need to correct for the war to stop. I think the investors have taken a wrong cue. He wasn't referring to our markets, he was referring to the US markets. So that's one thing I want to clarify before I get into anything else. It's a joke. But anyway, so on the HDFC front, the fact is that you heard Mr. Keki Mistry in the morning. You heard him clarify that there's nothing wrong with the bank or the corporate governance or the ethics within the bank as such. And obviously, I mean, I would rather take him at the face value and the history of the bank, which has been very squeaky clean, if you will. So I think it's being very unjustly beaten down. I'm sure the markets were in a much easier phase. You would have seen the recovery happening, which it did. In the morning, it did recover a bit, but came off again with the fall in the market as such. So I don't think there's any problems here. The valuations are very appealing. forget about the sum of parts. Even on the price to book basis, they're very appealing. So I think we're in the camp where we would be adding, but given the weakness in the market, we're still awaiting our turn. We did put in a bid in the morning, but we didn't get it at the price that we were looking for. And anyway, we'll wait it out and see how it goes.
All right, you might just get that price, Dinshaw. You know, the stock is perilously close to that 800 mark, a mark that it has been holding for most part of today's trading session. And the Nifty, as we speak, is below the Monday low. That is the headline of, this moment. The Nifty is below the low of Monday. From Monday low, the Nifty saw a big jump of over 820 points in the subsequent 2.5 trading sessions. Took one full session right now for the Nifty to give up all of that. It's down 825 points in a day, down 3.5%. The sensex down 2,700 points, led lower by the Nifty Bank as well, which is lower by about 2,000 points. So across the board, there is selling, and it is only getting uglier as we move towards day's close. Nigel, below the Monday low, there was a mark which was extremely important for one to track.
The Nifty hits the lowest level we have seen since the 11th of April, 2025. That's the mark that we're looking at. I'll tell you what, we have an HDFC Bank con call that's on. Let's cut across.
Ladies and gentlemen, we lost the line for the participant. Next question is from the line of Siddhi Naik from Bloomberg. Please go ahead.
Hi, sir. Thank you for the opportunity. I had two questions. I'll start off with the first. Was there any attempt by the board to kind of ask Mr. Chakraborty to reconsider the language in the letter, because that has seemed to be, kind of king investors as well as the stock market as well, the shares basically. And has the board kind of thought about the reputational damage it could cause the bank, not just domestically but also globally? Since you mentioned that Mr. Chakraborty did not provide specific instances of lapses, etc. That's my first question.
All right, so let me try and answer that, and then my colleagues can pitch in, because I was not physically present in the meeting. Mr. Chakraborty was asked by the board members as to what were his specific complaints or what were his specific concerns, and he said that there's no particular specific concern that he had. So that's number one. Number two, as far as the reputation of the bank is concerned, we've been trying to, we did a call this morning. We've spoken to a number of people, and I'm sure we'll be able to arrest whatever little risk that reputation may have taken. But please believe me, the governance standards in the bank are top class. Anyone wants to add anything?
Yeah, this is Ranganath here. I was physically present at the board meeting. I fully endorse what KK said. I think the board members repeatedly asked, requested for any specific instances, and I think there was no specific instance that was pointed out.
Thank you. Next question is from the line of Saloni Shukla from Economic Times. Please go ahead. Saloni ma'am, can I request you to unmute your line and proceed with your question, please?
Yeah, can you hear me now?
Yes, we can.
Yes, ma'am.
Yeah, hi. So good afternoon, sirs. Just wanted to, I have two questions. The first is basically, this particular word that was used in the morning analyst call, baffling. Anybody who covers the bank closely has heard murmurs about, the differences between the management and Mr. Chakraborty, especially after the MUFG deal. So, I would like to understand why does the current board and the management feel that they were baffled by, the resignation, and especially the tone and the timing of this letter when Mr. Jagdishan is up for reappointment in the next 7 months. Particularly, banks give, the recommendation 6 months before schedule, and this just hits right on time. So that is my first question. And second is, the governance issues. The bank is considered as the gold standard of Indian banking, the trust that the bank has created. But since morning, multiple analysts that we have spoken to are now raising questions and doubts about the governance issues and, the trust that the bank has built. So what more can the bank do now? Your ADRs were down 7% despite the call that you made. Then, the stock is down by 5%. What more can you do to build this trust? Because constantly there are some or the other. There is an anonymous Twitter handle which keeps on putting, information about your bank. So if you could address both these issues, please. Thank you so much.
Well, all I can say is that as a management team and as a board, we are united. The management will be speaking to all the major shareholders here in the course of the next 1 or 2 days. So whatever fears are there in people's mind will get addressed. I don't believe there is any governance-related issue in the bank, and I think that is something which we've consistently talked about. Getting trust back of investors is a matter of time. I'm sure people will understand, and RBI itself has issued a clear clarification where they have expressed their satisfaction with the way the bank is being run. As regards Shashi's reappointment, this is 7 months away. Obviously, to my mind, Mr. Chakraborty's resignation has nothing to do with Shashi's reappointment. They are completely different matters. And NRC, the bank's NRC, will consider Shashi's reappointment in the very near future. Anybody would like to add anything? Please go ahead.
Keki?
Yeah, please go ahead.
Keki, can you hear?
Yeah, please go ahead. We can.
Okay, this is Renu Karnad. I had used the word baffling in the morning, and the reason was that at one end in the sentence in the body, Mr. Chakraborty had mentioned his comments on ethics, and we had asked him to please elaborate, to please tell us what it was, because if there was anything, then we need to correct it. And every time we asked him that, his response was nothing. But you have this written. So that is what was baffling. That in the letter there was this saying that he was not in congruence with what was happening. But when we would ask, give us some instances, please tell us, he said nothing. So that is the reason why we were baffled that at one stage you're saying something, but you're not, wanting to give us, and you're saying nothing actually. You're not even saying that I won't elaborate. You said nothing. So that was the background.
Thank you, Renu.
Thank you very much. Next question is from the line of Ritu Singh from CNBC-TV18. Please go ahead.
Mr. Mistry, I just want to reiterate, we understand that the differences between Atanu Chakraborty and the senior management, it's not a recent issue. It had been building for some time. So as an HDFC insider who knows the institution so deeply, I wanted to understand, how does a chairman's growing discomfort go unnoticed for 2 years? And when again you say that when the board quizzed him about what exactly was his concern, talking about the values and ethics, he had nothing to say and the board was baffled. But the fact of the matter is his statement has done reputational damage to the bank. So, what next from the board? Are you going to seek a written explanation? And, what do you do if he refuses? That's the first question, and then I'll come to the second one.
This is something which has just happened yesterday. The board will, of course, be meeting in due course. The board will discuss how to take this forward. And regarding the relationship issue, that is more a personal relationship issue. So let's not get into that. And to my mind, as far as the reputational damage that we talked about is concerned, I'm sure people will understand once, especially with the RBI clarification, that there's really nothing serious and precisely wrong in any manner whatsoever in the bank.
Mr. Mistry, the second question was really around the continuity at the top. You have a chairman who's just resigned, so you have to look for a new chairman. You have Bhavesh Zaveri, who will be retiring in April. There's been a few exits and retirements in the last couple of months. There are more lined up for 2026. So at such a time, can the board really afford to have a change in the CEO? And when you say the NRC will look at Shashi Jagdishan's reappointment at an appropriate matter, has this issue not been discussed at the board level so far? And how quickly, should we expect the board to submit Sashi Jagdishan's name to continue as CEO for another term, 3 years or, whatever that may be?
Ritu, the board will certainly be meeting in the next, or the NRC will certainly be meeting in the next 1 month or so, and put in the recommendation, which would be approved by the board and informed to RBI. They are fully cognizant of the time limit, and we'll take care of that.
Thank you very much. Ritu, I'll request to come back for a follow-up question. Next question is from Nano Subhana Sheikh from Mint. Please go ahead.
Hi, sir. Good afternoon. Sir, I wanted to ask this term that was used, the baffling term. I understand that you've addressed it, but I also wanted to ask, does that indicate a failure of internal communication at the highest level? And also, why should investors trust the no-issue stance when there is zero disclosure on what triggered such a strong language? I'll come to my second question, sir.
Well, really, we don't. That's probably the reason why the word baffling was used by one of the board members, that we really do not understand what led to this kind of a reaction from the chairman yesterday. And that's the reason why the word baffling was used. I don't think there were any, there are usual routine issues which keep getting happening in every large organization, which would have happened in the bank also, but there is nothing else from a governance standpoint. Please believe me that the HDFC Group stands for governance. The single most important priority that we have always attached to our businesses, to our companies, to in the entire group is governance. And governance and ethics comes above everything else.
Right. Sir, did RBI seek any...
That is the management of HDFC Bank, Iki Mistry, joining in with a lot of other board members as well, fielding questions from the media. This morning there was an investors call as well. The sum and substance of it all is that the board is posing a united front in this wake right now. But there is no difference in terms of commentary that has come in from the management side versus this morning and the afternoon as well. And, maybe that's the reason why, along with increased weakness in the market, the stock has continued to seek lower levels, currently broken that 800 rupee mark as well. And the Nifty, however, has seen some bit of recovery, and that recovery can be attributed to some of the auto stocks, maybe at best, maybe some sort of, recovery of lows in Reliance as well. All these stocks are still sitting with big cuts. Remember, the Nifty is holding above the 23,000 mark. Dinshaw, you've spoken on HDFC Bank. We've spoken about that at length as well. My question to you was on all of these new age companies, because you guys have been backers of them. Eternal, say something like a Swiggy or Urban Company, a lot of them have seen big cuts, some even halved from the top. Quality of growth, the kind of runway, the opportunity is never a question. It was always about valuations. At lower levels, are you seeking value here and topping up? Or do you believe that there are further more attractive levels for you to top up on these counters? Dinshaw? Okay, I think we've lost that connection with Dinshaw. We'll try and repatch that as well. But right now, Eternal is among the top losers on the Nifty after having seen a big gain in the last few trading sessions. Still, managing to hold on to this week's gains by about 6% But what we'll do is take a short break with the news that the market is continuously selling off, though holding on to that 23,000 mark. As always, we'll get you a check on what dealing rooms are saying, and a very important one at that. Flows will be crucial to track, and we'll get you the tomorrow trade as well with our technical expert.
Welcome back. You're tuned into Closing Bell. The markets are under pressure, but I think ONGC could be a stock to watch, at least in the near future, because the stock hasn't seen any big bazooka move. Though we have crude oil prices that have spiked, and with no de-escalation, in sight, I think that's going to be one of the stocks to track. It's up only 1.5% as we speak. That said, hopping across to Nimesh to tell us what is he picking up in D Street chatter. Nimesh, well, the stocks are getting smashed today. We're at the lows of the day.
Oh, absolutely. It's a brutal sell-off, and technically we've just wiped out all the gains that we've seen in the last couple of days as far as Nifty or some individual names are concerned. While there is a geopolitical risk, the crude is at 119 rupees at a new low. Those, of course, are the big concerns, macro concerns, and because of which there is a bit of panic. But there are some technical factors as well, because of which the markets are sharply down. The first being a big drag in the financial names. HDFC Bank is a big culprit there. But even outside of HDFC Bank, there is selling pressure across the financial names. A lot of the NBFC names are down 4-5% each. So clearly it looks like there is a bit of capitulation, at least in the financial names, by institutional investors today. From a flow perspective, there is selling pressure from FIs in today's market. We've seen in the last 2 days the intensity has been lower. But even today, it looks like there is going to be a sharp sell-off. Of course, part of it will be because of HDFC Bank as well. But there is also the technical factor that some of the large domestic institutions, especially the insurance names and EPFOs, they are not in the market today. So that there is a lack of buying as well from the domestic side. Some of the domestic mutual funds are active, but it is the insurance companies are not active today. So you're seeing a lot of impact as well from the selling from the larger institutions in the large cap names today. Technically now we are very close to that another big support of 22,800. If that gets taken out, you will see further capitulation in days to come. So watch out for that. Two couple of things to watch out from in the very near term. Of course, the PCR is at 0.85, close to 0.6 is when we see a bit of a bottom. And if VIX crosses 25, you'll see a bit of recovery there as well. So these are the two technical factors to watch out for. But I guess, the big impact today is because of lack of buying as well from some of the domestic mutual funds or domestic insurance companies who normally support in such days.
I think that point, Nimesh, no support coming in from the domestic funds as well this time around today. So that makes tomorrow a more important day to track as well. Individual stocks, what are you gathering in this market?
Well, so the first stock is HDFC Bank. That's been the big talking point in the dealing rooms as well. From a flow perspective, while the stock is recovered from the extremely oversold intraday lows, I understand at least some of the large HNIs and some domestic mutual funds did buy into HDFC Bank today, but there is selling from the larger FIs into HDFC Bank. So expect high delivery volumes, and probably that will reflect in the FI data as well in terms of large sell-off, and part of it will be because of HDFC Bank as well. So that's the first name. The second name is Go Digit. In a very weak market, that's at the margin in the green or flat in today's market. But understand at least one large FI desk is looking for a large offer block as well in Go Digit at current levels. And the last name is MGL. Again, marginally flat in today's market. But I understand at higher levels, there is supply coming in from large institutions to sell into MGL. So not reacting today, but at higher levels, there are definitely sell flows in MGL as well from the larger FIs.
Got it. All right. Thanks for that, Nimesh. Let's hop across to Mitesh. Mitesh, what are your calls? I think, you are saying to hold on to your short positions, right? Carry it for tomorrow, both on the Nifty and the Nifty Bank.
No, that's right. On the indices, as I said, we have put spreads, and that typically don't give you a lot of hit when the market kind of gives you a bounce back. So assuming that and staying with the idea that the bigger trend is on the downside, I think on the index, put options or put spreads should be held on to. On the stock side, while it's very risky to take a shot at 70 points down kind of an index, but the direction is negative, so we'll keep going with that. Dabur is a SCBT with a stop at 435 for targets of 422. And the other one is Chola Finance. I think that's a stock which has had some kind of a very negative day. So SCBT here with a stop at 1465 for targets of 1440.
All right, take that point. Thanks a lot, Mitesh, for joining in. We'll speak to you tomorrow as well. For now, we are seeing some sell-off in a couple of other broader market names as well. Glenmark Pharma is at the low point of trade. Container Corp, ever since news flashed yesterday that there were, perhaps some sort of news piece reports coming in where Shipping Corp would perhaps be merged with Container Corp. From those levels, the stock has seen a sharp sell-off currently at the low point of trade. Hindustan Aeronautics is down 4%. Warlike situations do well for a couple of these defense stocks. Can't say the same for a couple of these names right now. Solar Industries too at the low point of trade. And alongside that, we are seeing continuous selling in mid-cap IT names as well. First Source is one of them, which is at the low point of trade. But another one which is lower, though off lows right now significantly, is PB Fintech. The IRDAI has asked insurance companies to significantly lower commissions on insurance products listed on Bima Sugam. What are the implications of this? Yash joins in with more. Yash.
Well, just on March 17th, a very important meeting took place between the regulator, IRDAI, which had the chairman and member non-life present in that meeting with all the insurance CEOs. And the discussion primarily were on two things. One was Bima Sugam and the second one was PIR, which is Public Insurance Registry. As far as Bima Sugam is concerned, at the start of the presentation itself, the chairman made it very clear, according to our sources to the industry, that the commission structure for Bima Sugam should be significantly lower than what the insurance companies are paying elsewhere. As a reply to that, what we've been given to understand from our sources, that the industry also through its presentation informed the chairman that Bima Sugam will follow a zero commission model and the only cost which will be attached to any insurance policy and the premium under that insurance policy would be the platform fees, which together would be much lower as compared to the commissions which the industry is paying elsewhere. What we've been given to understand is that the industry has assured the regulator that in the next quarter, that is the first quarter of FY27, motor insurance policies will be listed and available on Bima Sugam for the sale. And then in the second quarter, term life and health insurance products will be available, which means in the first half itself, three important insurance policies, motor, health and term life will be available on Bima Sugam. PIR, Public Insurance Registry, was also discussed, which will have all the information of every insured person and will be a plug to Bima Sugam.
All right, Yash, thanks a lot for that. So that's about this story from the insurance space. Meanwhile, Sudeep Bandopadhyay, the market expert, joins us as well. Sudeep, any stock that you believe is worth buying after this big correction that we've seen today? Anything that has come into value zone, anything which is attractive, anything where capital can be protected?
Well, I think, very aggressive stand, but I think Larsen Toubro L&T is definitely merits buying. Unless the assumption is that this war is going to continue indefinitely, it's a matter of time before this war stops and things will start coming back on track for L&T. They have a significant exposure in West Asia, and the concern which the market has expressed because of that by bringing down the share price is to an extent genuine. But this is all very short term. And, you're getting L&T below 3,500, where if you look at the brokerage recommendations, most of them were above 4,000. So under these circumstances, I think from a little aggressive investor point of view, having a long-term outlook, L&T is a great buy at current levels.
All right, Sudeep, hold on. We're going to take a short break, come back, we'll wind down the markets, we'll try to squeeze in a couple of questions as well. Stay tuned. Well, as we took that break, there's been a big recovery from the lows. Just take a look at the Nifty Bank, actually. That's seen a good recovery. Stocks like ICICI Bank, they've seen a recovery. I think some of these heavyweight stocks, they have helped in pullback closer around 100 points from the day's lows. Just pull up a few stocks, Reliance Industries, ICICI Bank, as well as Bharti Airtel. All three of them have seen a good recovery, which has led to a bit of a fight back. Even SBI, I think we should pull up. So SBI and ICICI Bank, both of them are trying to do some bit of heavy lifting, and that's why we've seen a recovery. So this market is looking a little bit jittery, or very jittery if you'd like to call it that, but it's giving you an opportunity to get into some mid-cap names, and that too at the price of your choice. You want to name a couple of them?
Well, definitely. I think, if you're a long-term investor, this kind of environment gives you an opportunity for picking up stocks for long-term. And we have seen this getting repeated time and again over the last 30, 40 years. So I strongly believe that this is an excellent opportunity, provided you have liquidity, to start buying slowly. I don't know whether we have seen the worst yet or it's going to come, but it's a matter of time before things settle down. Whether it's going to be 7 days or 15 days, we'll have to wait and watch. As far as specific stocks are concerned, some of the auto component stocks which we like for quite some time, one is Samvardhana Motherson, the other is Sona BLW, both can be looked at current level. amongst the chemical, agrochemical, specialty chemical pack, UPL has been our favorite for some time, and that can be definitely looked at current levels. Some of the fertilizer stocks, there is too much of turbulence, too much of uncertainty. But if you look at slightly ahead of this, I think things are looking up for all these sectors which I'm talking about.
Right, things are looking up whenever things settle down or there is some sign of de-escalation. Thanks a lot, Sudeep, for joining in. As we start winding down, there is notable recovery from the lows, almost 130, 140 points from today's low. And today's low will make another panic important level to track as we move forward. But the market still continues to be fairly wobbly. The Nifty down nearly 700 points. The Bank Nifty down 1,700 points. Could have been a lot uglier, but but for the last 100-point recovery that we saw in the last few minutes. We're going home with big cuts on the frontline indices, a lot more in the portfolio side, Nigel.
Well, that's right. A lot of stocks are doing nothing of their own in today's trading session. So let's name a few of them for you. Gujarat Alkalis, that's one of the big gainers in today's trading session. Massive move is what we saw on that particular name. I think we should get that one up for you on the screen. Big move in today's trade. Butterfly Gandhi as well, that stock was up close to around 10%. So there were a few winners in today's trading session, and otherwise weak looking market. I think even Vare Energies, if I'm not mistaken, I think that one was doing a little bit better. No, I'm not getting a refresh rate on that particular name. But net Mangalam, a weak trading session. At least the number of stocks advancing got to around 450 stocks. Otherwise, the screen is looking extremely pale, just around 30 minutes or thereabouts. There could be an element of sensex weekly expiry as well that played out. And today, the bigger element, though, was that domestic participation could be relatively lower. And add to it, you had HDFC Bank that dragged the index down by more than 100 points. We'll wrap up on this edition of Closing Bell. You stay with us. The team of Markets Forward comes up next.